Some unlikely performers, Benin, Cote d'Ivoire, DRC, have had strong economic performance. Going into next year, we also see some other unlikely countries there as well, Niger, Senegal, Djibouti, leading economic growth in Africa. Now, this is to emphasize that when you look at the macro high-level trend of growth in Africa, it's important to piece apart where exactly those trends are coming from and what are the engines driving that growth. Now, when it comes to foreign direct investment, the trend has also shifted over the last few years, where traditionally we've seen South Africa, Nigeria, again Ghana, lead some of the investment trends. As we see liberalization in countries like Egypt, investments in infrastructure and also manufacturing in other regions in West and East Africa, the interest from investors is starting to shift from the key economic regions into newer regions where some of the challenges that affect the macro and industrial trends have been unlocked by governments. Now in West Africa, we see countries like Senegal, Cote d'Ivoire continue to lead and also take a larger share of foreign direct investments. But FDI is only one part of the story. The other part is also where private investment is going. And again, some of the things you see here are things you've heard a lot about. Fintech being a very big and leading sort of attracting investments to the African region. That continues to be the case. However, part of that is shifting. This year, we've seen a decline in investments in technology across the region. I believe last year we had over $4 billion invested in the region. This year, I think we're not sure we're going to cross $3 billion in the technology investments. Now, whilst fintech has been a key part of the infrastructure because of how it plays in terms of enabling other sectors, we expect that other parts will start to play a bigger role. For instance, energy and water. In the last quarter, energy and water was actually the leading investment sector when it came to technology trends in Africa, followed by retail, agriculture, and this is essentially us seeing a return back to basics, where it doesn't matter if the payment system works. If access to clean water, energy, basic food, basic needs are not met, we will still have blockers in Africa's growth story. Now, increasingly, the technology is captured by the services sector, and because of how much it contributes to the GDP, we expect to see that to still be a very big part of the sort of growth trends. Now, new investments in Africa's energy sector have increasingly gone towards renewables rather than fossil and oil and gas. And that's because, again, sustainability has become a very key trend. Now, climate resilience, climate protection has been an important factor for many investors, both from the development finance angle, but also in terms of what is sustainable for the region and what's sustainable for the continent. That is, again, something that we expect to continue to see. We see it as essentially a very important key sector to continue to invest in and continue to see growth from. Again, emphasizing that point, I mentioned earlier, energy and water beating fintech as the largest share of funding raised in the last quarter. One particular area we've seen a lot of investments go into is off-grid energy, where it reduces the reliance on sort of like the key infrastructure around power. One country that struggled with this transition is South Africa. Obviously, some of you would have heard with the power cuts, the rolling power cuts that have been happening and load shedding that have been happening over the last couple of years, South Africa has struggled with energy sustainability, and that is one country we'll be looking at to see how they transition into some off-grid solutions to continue to sort of support their economic growth. Now, just to quickly summarize, what are the key drivers for Africa's economic outlook? Now, we expect investments to continue to play a very big role, public and private. We also think adequate monetary and economic policies are needed to unlock some of the blockers we've seen, particularly with foreign exchange, inflation, which has marked a lot of the large economies in Africa. Investment policies to also attract investors and keep the investment safe is an important thing to keep in mind. And also the regional integration of the AfCFTA is going to be an important piece of the puzzle, particularly because intra-African trade continues to be a blocker. Whilst export is important to other parts of the globe, exports within Africa continue to be a challenge because of the logistical hurdles to overcome. Where the opportunities are is obviously in the increasing urbanization of the region, when we see people move to cities and also sort of take on more work that contributes to services. Technology will continue to be a very key player, either in financial services, energy, but also other parts of e-commerce and logistics. Finally, in terms of energy, sustainable development of energy is going to be important to make sure there's continued growth, and the over-reliance on sort of fossil fuels will essentially decline. Now, what are the risks that we expect for investors to navigate? Inflation continues to be one, foreign exchange is another one. This comes down to what we see in the monetary and fiscal policies from these countries. Now, some countries obviously are more stable than others. It is not one monolith. They all have different trends. What will be important for investors is how they capture those growth opportunities across the different regions. Each region has specific sectors that are high performers, whilst there are other sectors that are underdeveloping and need sort of more support. And again, just to iterate the point I've just made, political, economic, and regulatory reforms are essentially, at least when we look at the public sector, where we expect reforms and improvements to essentially get us to where we need to go as a continent. It's a little bit about what we do at Stairs. I'm not going to bore you with this, and I'm going to hand back over to Mark. Thank you.
Abdul Rahim, co-founder and CEO of Steers. Bore me, Abdul? That was the most interesting presentation I've seen in the last 3 days. Give him a round of applause, please. Absolutely. You know, Charles Saatchi, the advertising giant, used to use the term, the brutal simplicity of thought, how difficult it is to take complexity and boil it down into simple, sort of vibrant truths. That was the brutal simplicity of thought at play there. Thank you very much, Abdul. Next, we have a fireside chat. I'm going to invite to sit with me next to the fire the chairman of investment banking, Middle East and Africa for the Wall Street giant Citigroup. Please welcome Mr. Miguel Azevedo. Just take a seat, any seat, Miguel. He's not alone. There are three of us. Joining him is the managing director of a private equity firm based here in Egypt that's been around since the early 1990s. So he knows a thing or two about investing in Africa. Please welcome Mr. Ismail Talbi, managing director of Afric Invest. Okay, so I'm going to have to, with these mics, you have to point them right at your mouth, the directional, hello. Yes, hello, yes, okay. You know, this is like speed dating, gentlemen. We haven't got much time, so we've got to be fast, okay? So I'm going to just fire questions at you, and I know that you've got, you can answer them. Miguel, it's nice to see you again. We've known each other for a decade now, and I've seen your work and admire the work that you do on the continent. Miguel, has it been a good year for you?
Yes, it has been a very good year. That's the good news. The bad news is that it has been a sort of the culmination of work over the last 3 years. And if we look forward, it's not looking bright. There's too much uncertainty. We can discuss that in a different question. But there's too much uncertainty in too many big countries in the continent.
Okay, I'm going to come back to that. I just want to introduce everyone to Afric Invest. You're a veteran. They call you guys a veteran. You've been around, as I said, since the 1990s. You've raised, what, $2 billion in that time? How would you say your investment strategy is evolving or has evolved over those years? And also, what are you looking at? What's hot? What sectors are hot? What are you paying attention to?
Yeah, thank you. I don't know if we have this presentation here.
Yeah, we can put the presentation. You have a little presentation up that we can put up on the screen here.
Yeah, we have it here. I don't know how to.
We can see a presentation. Ah, there it's. They've got it. Go ahead.
Yeah. Anyway, it's not a problem. So Afric Invest, we are. Okay, perfect. So African Invest, we are a private equity firm. Maybe we are the oldest in the continent. We have been created 30 years ago, roughly speaking, in 1994 in Tunisia. And since there, we evolved from Tunisia to cover the whole continent, from North Africa to Sub-Saharan Africa. And today, we have, roughly speaking, $2 billion of asset under management. But more importantly, maybe we are the most active private equity in the continent in terms of geographical coverage. We invested in more than 35 countries in the continent. And in terms of number of transactions and number of investment and divestment in the whole continent for the past 30 years. So as said, we evolved from being just a local Tunisian player to becoming a Pan-African player. And this is one of the key of our longevity or success in the past period. That's how we succeeded to stay in operation for the whole period, being a multi-regional player, being active in different geographies, helped us to mitigate the different risks and, let's say, constraints that we are seeing in our continent. So investing in East Africa, West Africa, North Africa, and Sub-Saharan Africa, generally speaking, helped us to leverage on the strength of the full continent while mitigating the risk that we are facing also on our continent.
So I'm going to go back to Miguel now, because you were tantalizing us, obviously, with some things. It is a challenging macro environment. We saw that from Abdul's presentation there. But capital still always looks for returns. That's the nature of capital, right? So give us a little bit more, put some meat on the bone there. What is investor interest, investor sentiment right now for Africa?
So I think people buy the opportunity. There's so much to be done. The problem is you have to look at it on a sort of a macro and a micro aspect. The macro is definitely not conducive now. There's imbalances, and if you just take the three main countries as an example, but generally speaking, it is about the same. You know, Egypt in North Africa, Nigeria in West Africa, South Africa in South Africa, the three big engines, neither of them is going on very well. Imbalances, current account deficits, and inability to attract FDI. Before you sort that out, I think that the background will never become very conducive. Some places it's easier than others. I actually find, funny enough, and just trying to be a little bit controversial here, I think Nigeria is the easiest one to fix.
You think so? That's surprising.
That's surprising, but I think Nigeria is the one where small fixes can have bigger impacts.
It's funny you should say that, because the new president was in Saudi Arabia last week, selling, obviously, Nigeria, saying that that's exactly what he's doing, that he's fixed actually what the barriers and all the bottlenecks, and that Nigeria was, I know this is a cliche, open for business. Do you believe him?
I want to believe him, yes. I don't think we have seen everything yet, but you know, it takes some time. But I am somewhat more optimistic there, because I really believe small fixes can have a massive impact in that country. But then you have the micro side of things, and always in Africa is about the macro. The government level is always a discount, is always a negative. Let's be honest. But the entrepreneurial side of things, the individuals, are always a plus. I always call it, there's a micro premium and a macro discount. More recently, if you look, maybe, you know, if you look only at the public markets, i.e. IPOs, and it's a very niche market when it comes to Africa, the stories are not good. There has been several governance issues. And so I think this is what is new over the last 12 months, is some serious governance issues at companies that have listed internationally. And that has created a negative image that needs to be corrected. I mean, I still believe those are the exceptions rather than the norm, but that creates a negative environment, hence additional
Decreases risk appetite, for sure.
Correct.
Yeah, okay, Ismail, I want to come back to you. I mean, as I said, you've done so much. I just want to understand your approach a little bit. You know, you're active on the VC side, and we were speaking before this panel, and you said your approach when you go in, I think you said 35 countries you're in, how many countries now? 35 countries? Is to be Pan-African with a local approach. What does that mean?
Yeah, exactly. We try, first of all, to be local, and bringing our African network, being in a company in countries like Egypt. We are Egyptian in Egypt, we are Nigerian in Nigeria, and we bring to this local economy our African network. So our investment approach is the same, roughly speaking, within all these geographies, is to try to help local champion and local player to go outside their home market and to mitigate again the risk of being a single country exposed business. So just by helping them to go outside their border and to leverage on our African network. And we have been successful in doing that in different geographies. First of all, here in Egypt, in Nigeria, in Cote d'Ivoire, in Kenya. And we try also, by being local, to be aligned with the local economy approach and the strategies and government strategy. So we are not just doing our investment aside in the side of the table without taking into account the local context, but we are in this local context. We try to leverage on the strength of the local context, and we bring the African and regional flavor and added value. And this has been applied to our investment strategy, investment approach. So when we try to approach companies in some geographies, so if we take the example of Egypt, first of all, we try to target companies with potential of export and knowledge that we can export outside the market. And then we try to bring our expertise and previous experiences from the same industry, but from other geographies. So we try to bring this added value, and based on that, we try to taking into account the specificities of the local context, but we try to bring our previous experiences to accelerate the growth and to push the companies to go outside their home market.
And overall, as you look over bird's eye view, the market, what's the market like for the PE industry?
Yeah, it's quite challenging. It's quite challenging for the past, let's say, 2 to 3 years, especially on the main economies where PE player can really invest in the African continent. If we take the country that my colleague cited in the beginning, Egypt, Nigeria, South Africa, all of them are having some challenges as of today, FX challenges. We are seeing big devaluation, so we need to mitigate and to take into account this, and it's quite difficult. So again, we come back to our approach is to try to mitigate these challenges by trying to target companies with potential of export, companies with potential of going their home market, and company with potential to be less dependent and less reliant on their home market.
Yeah, and you spread, of course, across countries, and that mitigates your risk to some degree.
Spread at least across countries, across region, not being, again, just a single country player, but a multi-regional player.
I want to ask you brass tacks now, Miguel. Your 3 key deals, not your 3 last deals, but your key deals, the ones that you know, at dinner parties that you bring up, right? The last 3 key deals for you, what were they?
I would say this year, the sell side on Lekela, which is a multi-Africa renewable platform.
Yeah.
And it's, I hope, the first of many transactions in the renewable space. I would go, and trying to go back, I would go back to a deal we did many years ago in Nigeria, which was a company called Chi.
Food, beverages.
Food and beverage. It was, we thought at the time it would be and that got sold to Coca-Cola. Very exciting, new market, 200 million people, Coca-Cola, we have to be in Nigeria. It turned out to be not so great experience. So a deal that has a lot of lessons, and the lessons are primarily you cannot do import-dependent investments in Africa. To what Ismail was saying, we need to focus on import substitution or export companies and business in Africa. Import dependent, it's just not going anywhere.
And it's funny because that aligns exactly with what Ismail was
Absolutely.
saying. By trying to actually have your business approach
Has to be.
align with the government's approach for development in the country,
Absolutely.
that is one such example.
That is the only way out of this crisis in all these three countries and in the whole of continent, is investing in investing in agri, investing in manufacturing, there is a market, right? So import substitution is relatively easy. But to do that, you need the macro policies that are conducive. And I used to say that in Africa we were watching, better politics and better policies. Over the last 5 years, it was not that. It was actually, the other day I was discussing, if we look back 5 years, which companies in Africa have a positive delta in terms of, and we were running out of names. I came with two big names, Tanzania and DRC. But everyone else, I don't think we are much better than we were 5 years ago.
But you didn't give me your third. You said, unless
Yes,
I
the
missed
third
it,
deal, the third deal, I would say, probably the Seplat IPO. Seplat is an upstream company, oil and gas company in Nigeria.
I know, I invested.
I know. Well, again, it didn't turn out to be a great investment.
You can tell
but
me.
It's a company that has been trying to do the right thing.
Yeah.
And it was the first IPO of dual listing between
in
Lagos
London,
and
London Stock
London.
Exchange and Lagos.
That's why I mentioned it.
Yeah.
But I think now we are into an era of, on one hand, energy and energy-related, renewable-related, and on the second, tech and fintech.
And going back to energy, that Lekela deal was an interesting one because that was the Infinity Group Lekela, and there was Africa Finance Corporation, all invested and created actually from that deal the largest independent renewable player on the continent.
Absolutely.
Which is a very exciting space for you, I guess.
And it's a very interesting combination because you have Egyptian investors, you have Pan-African but Lagos-based investors, and you have a Middle East renewable company, Masdar, coming in, providing the financial muscle if you want. But it's the right combination, and I'm pretty sure this company will go very big in the very short term, and hopefully will be the first energy IPO out of Africa.
And again, aligns with Egypt's ambitions to be reliant on renewables in the future. Ishmael, back to you. The question is a straightforward one. The three key deals, the last ones you've done.
There are more than three maybe, but I will maybe focus on our Egyptian